Hello, I'm Juliette Sarli. In this week's edition of IG Macro Intelligence, we take a closer look at the next big company to list on the ASX. After decades of low prices, COVID-19 supply disruptions moved the needle in 2020 and 2021. The uranium price rallied again after supply cuts from major producers. The price of uranium took another leg up in 2022 with the unrest in Kazakhstan, which raised concerns over more than 40% of the global uranium supply. That, coupled with the Russian invasion of Ukraine, drove the spot price higher. After remaining stuck around $50 per pound, expectations for a so-called renaissance for nuclear energy helped propel the uranium price to $106 per pound. Since early exuberance this year, the uranium price has once again pulled back on easing supply concerns. A US law freed up $2.7 billion for the United States to beef up its domestic uranium fuel industry. However, that same law banned uranium produced in Russia from entering the US. From current spot prices, Citi says uranium has the greatest 12-month upside potential of mined commodities. Well, despite the pullback in the uranium price since the January highs, many are still calling for a uranium bull market, given the renewed focus on nuclear energy worldwide. Both the US and Japan committed to triple nuclear capacity by 2050. China plans to build as many as 30 nuclear power reactors by 2030. Nuclear is also widely touted to be a source for powering the AI revolution via nuclear-powered data centres. Morgan Stanley says rising supply could keep a lid on prices, but further supply challenges and a greater than expected impact from the US ban on Russian supplies could offer support. Citi, meantime, expects uranium spot prices to increase in 2024, especially in the aftermath of the ban on nuclear fuel supplies from Russia in the US. About 2/3 of the world's uranium production comes from mines in Kazakhstan, Canada, and Australia. The World Nuclear Association says Australia is a preferred uranium supplier globally, especially to East Asian markets where demand is growing most rapidly. Well, some stocks that could be affected by the uranium trend. Last quarter, Boss Energy produced its first drum of uranium and talked up plans to accelerate the production rate and increase the mine life at Honeymoon. Macquarie said uranium was a popular subject at its recent conference, with the supply-demand deficit a key theme, along with AI-driven demand. It points to Boss Energy's Alta Mesa project, which is expected to start production imminently, and its leverage to a uranium price upswing based on uncontracted supply. Paladin, a Macquarie preferred pick in the uranium sector. They have an outperform rating on that stock. Paladin Energy, a favourite of Citi, it recently reiterated its buy rating on the stock, although it expects a more conservative production ramp up by the miner in full year 25. And that is your IG Macro Intelligence for this week. We'll see you next week.